Okay, hello everyone, and welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton, and yes, I do have a white screen behind my head. And that is because I'm working on my home studio here, and I don't want to show you the absolute wreck that I've got down here right now. But I'm putting together, a nice little new studio here at the house that's supposed to will be nice once it's all the way done. But today in the Forex Market Preview, what I would like to do is continue the thought process that we had last week. Now, I talked about the trend continuation trade, and I talked about watching the structure. Previous structure support becomes resistance, and so on and so forth. And I want to take you back to last week and the euro dollar. Now, if you didn't watch last week, shame on you. But if you're new, it's not your fault, so just continue to watch this time. But we talked about, again, the little wedge pattern, the ascending wedge pattern, and the breakout that happened here. And then we talked about the ability to hop on the trend continuation trade as it came down. And then I told you guys, I said, watch out. And I even said, I think the headline in last week's Forex Market Previews, we could get a pop out of the euro. It looks like the euro's coming into this support zone. I pointed it out to you guys in last week's session, and I said, hey, we're coming down into these levels. I outlined it in a little blue box for you, said this is the potential reversal zone here, and boom, we got our pop. Now, I apologize because the lows here came in at about 2750, so call it 2800 basically for good measure. And we rallied to 3200. So there was only I only was able to provide you 400 pips of potential opportunity last week. I apologize. I'll try and do better. But the important point to note here is that all I was doing was reading structure. All I was doing was looking at the market and saying, look, we're pressing down into, basically almost an oversold condition. We like to see 20. We were about 20.75 for an oversold condition. So running right down into that support level, and then boom, we got a huge rally. Now, if you guys are, a lot of people will look at this and they'll say, well, why did that happen? I mean, what caused that 400 pip rally? Guys, it doesn't matter. In this case, it turns out that what happened was people got feeling a lot better about the monetary easing that was happening in the U.S. and Ben Bernanke's willingness to hold interest rates low. So they started to feel a little bit better of that, and you compounded that on the same day with the ECB coming out and basically giving some hawkish statements as well, which sent the market into the euro into a skyrocket mode. Now, all of that doesn't really matter, because we identified it days before, because we can identify the structure. And guys, I will hear me say it again and again and again. Look left, structure leaves clues. This is a mantra I want you to repeat over and over and over again. Look left, structure leaves clues. Every time you look at a chart, you should be saying, look left, structure leaves clues. Because all we did here was we looked at the previous structure. We said there's a structure here and here. There's a range in here. We're on a daily chart. So, our ranges are going to be bigger on a daily chart than they would be on, say, a 5-minute chart. But, hey, boom, market moves into the zone and rallies out of that. Now, again, where did we complete at? Where did we go to? Again, look left. Structure leaves clues. If you'll remember from last week, again, if you're not following this every week, you're missing very, very important information that's coming across every single week. I talked about, initially on the 4-hour chart, last week we talked about the potential, after this thing broke out to the downside, to look for a trend continuation trade to the upside. We found support in here. We looked left for where that support might come in, and we found it. Previous resistance, false breakout resistance, and resistance again. That resistance should become support. Boom, it came down. It did find support. Boom, we got a little bit of rally out of it, then the market broke down. So if you were on the trend continuation trade there, you took a small loss, and then the market broke down. You had a chance to short here. Market breaks down, a chance to short here, and then boom, a chance again as we moved into the zone to potentially get long depending on your strategy. Now, where did we go? The market rallies from 2800s back up to 3200s. Look left, structure leaves clues. Previous structure support, previous structure resistance, previous structure resistance, previous structure resistance. Is it any surprise that when the market rallies, boom, we find resistance at the same place we found support and resistance, resistance, resistance in the past? It should come as no shock to any of you that these things happen again and again and again and again. What is incredible I even had an email the other day from a trader who asked me. He said, how do I know where I should take my targets? Well, there's a bunch of different ways that you can do it. We can do it based on Fibonacci's. We can do it based on ATR. But one of the clearest cut ways that you can make the determination as to where those profit targets should be set is simply looking at structure. Where's the market most likely to find resistance? Where's it most likely to find support if I short here? Where's it reasonable to start looking for my targets? And in this case, boom, the market rallied right up into 3200s, reversed on a dime, and ended up closing 100 pips lower. Huge opportunity there. Should have been a big red flag for any of you guys who are trading this to the long side about where to find that resistance level. Now, guys, let me take a side note here. I don't normally do this, but I want to do it right now because I keep getting there. I'm for some reason I'm becoming wildly popular on YouTube. And I'm getting lots and lots of questions about, Jason, how can I take training from you? How do I get involved with that? Well, this is the way I do it. I don't. You're not going to call me up or call somebody up in my office and in most cases have them sell you something. It just the courses are rather expensive, and what most people like to do is they like to get a taste of what we do. It's not like we don't do that, and we don't have traders who will put you into a program if that's what you're looking for. But that's a conversation that we have to have. Typically, we run through a trader assessment. We try and do some things to kind of identify where you're at in your trading cycle and your trading journey, and try and find a solution that's going to best fit you. For example, are you a structure or mechanical trader? How long have you been trading? What have you been trading? All these types of things are stuff that we have conversations with you about. And before we kind of decide, well, okay, should this guy have a system that he should trade, or should we run into a training course, or basically it's not really it's really designed or tailored more towards what you want, but getting at what you really want and what your end goals are can be a little bit more difficult. So we have a little trader assessment that we run people through. Now, one of the easiest ways to get some training from me and to do it for free is to be part of the Technical Trader Workshop. I typically do 2 a year. And the next one is at the end of September, and so that's going to be your opportunity to come in, and it's an entire week of training that I do for free. It's all online, and it's designed to give you a foundational basis on this technical analysis. And again, I'm pitching you free stuff, so I please don't please don't run off on me, because there's a couple of patterns here that I want to show you into next week that are going to be potentially nice winners for you, or potentially nice trade setups. But I keep getting this question again and again and again about, hey, how do I find out more? How do I take training from you? All this type of stuff. The best way to do it is to sign up for the Technical Trader Workshop. So to do that, you have to actually be on my list. So over here on this side of the email, you're going to see a sign-up box that says, my big face on it, and says, sign up. Make sure you get your email address in there. That way you'll be notified when that comes up. Otherwise, you won't know, because it's not like I push it out and advertise it in a big way. We typically have a couple of thousand traders a day who come into that process. So it is, in my mind, or to my knowledge, it is the biggest online Forex event that is held anywhere. And so it's a great opportunity for you guys. And the next one, like I said, is at the end of September, and you'll hear me start to pitch it more and more and more as we get closer and closer. But I'm going to teach you a lot of this stuff in there. So if this is a little overwhelming, a little confusing for you, man, just hang on, stick with it. It is a beautiful thing if you're confused, because it means you're about to learn something new. So again, looking at the market come back up into support here. We also saw, for those of you who are looking at this ascending wedge pattern, you go, oh, that's kind of cool. We'll take a look at this. Let's jump over to Canada. Same exact thing, 4-hour chart. Watching that ascending wedge pattern. These ascending wedge patterns tend to break out to the downside, and they tend to provide very nice moves. Again, if we look left, where do we come into? We came into this little resistance level here. There's not a clear-cut resistance level here. Okay? If we look at this, because we've got, if I draw on the line here, we've got a line here, we got a up high, then we come back down, and we've got kind of a shelf of basically 3 resistance levels. We've got kind of 3 different peaks in here. It's actually a head and shoulders pattern, for those of you who are wondering. Yes, it is. And then when the market came back down, if I draw in a straight line here where the market actually found a little bit of support, and we look back, you'll see it fell in that zone against previous structure resistance, the last resistance area. That's where we ended up finding a little bit of support. Now, will we hold here or will we fall further? I don't know. What I can tell you is there was a beautiful trend continuation trade that set up right here. If you didn't catch the breakout, boom, the market breaks out to the downside. Then what happens? The market rallies back up. Where do we rally back up into? Look left. Structure leaves clues. Let me draw it in. Boom, right there. Previous structure support then becomes resistance, and the market rolls back down. Now we'll have to see whether or not we get any follow-through on this trade. If we do get follow-through, where are we likely going? Look left. Structure leaves clues. You've got a previous support level here, and you actually have a smaller one that comes in right in here. So you got previous support equals resistance. That's likely to be the next spot that we might pause. So you're looking for a move from about 103.91s to 102.74s, about a 100 pip move in there. Not bad for the risk that you're taking because your stops will have to be above 04.34. So you're taking about 50 pips of risk or so for 100 pips a gain. Pretty nice little trade opportunity there. Now, let me show you the two for next week. That one, that's a freebie, as if the whole thing isn't free. But let's take a look here at potential cipher pattern, pound New Zealand 4-hour chart. We're hovering around, double topped against 618 retracement at 94.09s. We're looking for 94.50s. I'm sorry, 95.60s. We're looking for 95.60s here for a short. Actually, 95.61 to be exact. So if the market can press up into that, we'll be looking for a short. And then if I go down to Euro-New Zealand, that's Euro-New Zealand, you're going to see that we've actually already completed this cipher, and we're getting a little better price than you would have got had you identified this during the week. So Euro-New Zealand 4-hour chart pressing up to the 167.44s. That's the short. We're now sitting at 167.81, so you're getting at a little better price, looking for a press back down into. We're looking for a move back down into 65.80s. Okay? 65.80s. So a very nice potential profit there. And again, stops above the X leg of this move. And if you don't understand pattern formation and stuff like that, again, that's a little bit more detailed of a process. One of the best things that you can do is just join the syndicate. The syndicate is very, very cheap. We have brand new software out that actually delivers you all the patterns that we're identifying throughout the week in real time to your desktop. It's a beautiful, beautiful program, and we also do some training in there to kind of teach you guys some rules of engagement stuff for the patterns, to give you guys kind of a cursory understanding of exactly what's happening. It's not a full training course or anything like that. They're quick hit videos, but it's designed to give you an introduction into pattern trading and also to give you a whole lot of patterns to actually trade. So it's like $20 a month. It's so cheap. I should be punished for making it so cheap, but it's what I do. So I'm on a bit of a roll today. Anyway, very exciting stuff. So I hope this was valuable to you. Yeah, please, again, sign up. Go to the YouTube page. Click on the YouTube video. Go to the YouTube page. Subscribe to my YouTube page. I do lots of other stuff. I also have the live show that I do every week. And now I'm getting ready to do something with Akil, one of the traders, a pattern trader who runs our live pattern room. With him, I'm going to see if he doesn't know this yet, but I'm going to see if I can hook him up to link up with me once a week and to do an actual interview type show where he covers what he's been seeing throughout the week, and I can pimp him out about some of the stuff he's seeing and some of the stuff he's dealing with, some of the questions he's getting from traders, and basically give him a chance to kind of work with you guys on a broader scale too. He's a very phenomenally good pattern trader, and runs, in my opinion, the best live trading room in the entire world, bar none. So anyway, let's sit tight, guys, or good luck and good trading this next week. I'll see you guys on Thursday for the live show. Again, subscribe to my mail list, and also subscribe to the YouTube page. Thank you, guys. I'll talk to you soon.